the man who explained gravity, the man who invented calculus, the man who unlocked the laws of the universe, lost everything to a financial scam, not because he was reckless, not because he was ignorant, but because the system he trusted was stronger than intelligence itself. In 1720, Isaac Newton, the smartest human being alive, watched his fortune disappear in one of the largest financial collapses in history. Adjusted for today, the damage reached trillions of dollars. And what's most disturbing isn't that it happened. It's that we keep doing the exact same thing again and again. This is the story of how genius lost to human psychology and why it's still happening to us today. Early 18th century Britain was drowning in debt. Decades of war had turned the nation into a global power, but at an enormous financial cost. The government owed more money than it could repay through taxes alone. There was no modern central banking system, no economic playbook, no clear solution. What Britain needed wasn't reform, it needed belief. And belief arrived in the form of a company with a promise so powerful, it captured the entire nation's imagination: the South Sea Company. Founded in 1711, the South Sea Company proposed a bold solution. It would absorb Britain's national debt. In return, it would receive exclusive trading rights with South America, a land Europeans believed was overflowing with gold, silver, and endless riches. It sounded flawless. One company, one monopoly, unlimited profit. There was only one problem. Britain had almost no access to South America. Spain controlled the ports, trade was restricted. The riches existed mostly in myth. But the South Sea Company wasn't selling trade, it was selling a story, and stories are more powerful than facts. This wasn't just a private company, it was state-endorsed. Members of Parliament owned shares. Government officials promoted it. The king himself was connected to it. This created a dangerous illusion. If the government supports it, it must be safe. Investors were encouraged to swap government bonds, already considered secure, for South Sea shares. The government reduced its debt. The company gained investors. The public dreamed of wealth. Everyone believed they were winning. That belief was the real asset. By 1720, Isaac Newton was no ordinary citizen. He was wealthy, knighted, and serving as master of the Royal Mint, responsible for Britain's currency. Newton understood numbers, risk, and probability better than anyone alive. When South Sea shares began rising, Newton invested early. He made a profit. Newton exited with a fortune worth millions in today's terms. He had done everything right. This should have been the end of the story, but it wasn't. After Newton sold, the stock kept rising. Friends, colleagues, even people he considered intellectually inferior, were becoming unimaginably rich. Every conversation carried the same unspoken message: you sold too soon. This is where logic fails, not because Newton didn't understand the math, but because markets are social systems. Eventually, Newton re-entered the market, but this time, he wasn't early. He was late. By mid-1720, South Sea shares had increased nearly tenfold. Speculation exploded. New companies appeared daily. Many had no products. Some had no explanation. One infamous venture advertised itself as a company for carrying on an undertaking of great advantage, but nobody to know what it is. And people invested anyway. This wasn't ignorance. It was mass psychological contagion. The South Sea Company fueled it, issuing new shares, spreading rumors, and promising endless growth. Newton doubled down. Bubbles don't burst loudly at first. They stall. Then insiders quietly sell. Then confidence cracks. Once belief disappears, there's nothing left. The stock collapsed. Fortunes vanished. Families were ruined. Isaac Newton lost roughly £20,000, essentially his entire fortune. In modern terms, Historians estimate the South Sea bubble destroyed trillions of dollars in economic value. Newton never financially recovered. Parliament investigated, executives were exposed, bribes uncovered, corruption revealed. But the pattern repeated itself. Insiders survived. Power remained untouched. The public absorbed the losses. Newton refused to discuss the event again, except once. When asked how this could happen, he said, "I can calculate the motions of the heavenly bodies, but not the madness of people." 300 years later, the pattern is unchanged. The dot-com bubble, the housing crash, cryptomanias, speculative tech booms, different assets, same behavior. Trillions of dollars lost. Highly intelligent people ruined. Again and again, confidence is mistaken for certainty. Because intelligence doesn't protect you from systems built on belief. Before we finish, there are 3 important lessons we can take from this story. Lesson 1. The first lesson is simple. Markets don't run on logic or intelligence. They move on human behavior, fear, confidence, and imitation. Lesson 2. The second lesson is more dangerous. If an investment needs constant belief to succeed, it's already fragile. When that belief fades, there's nothing underneath. Lesson 3, and the final lesson. In a bubble, being late is far more dangerous than being wrong early. Most people don't lose money because they were wrong. They lose because they arrived too late. Isaac Newton understood the universe, but even he couldn't escape a system built to exploit confidence, authority, and hope. The next bubble might look different, but when it hits, it will feel exactly the same, and people will once again ask, "How did this happen?" If you want more stories about money, power, and the psychology behind financial collapse, subscribe. Because the most dangerous scams aren't illegal, they're believable.